If you run a growing service-based business, I'm talking your marketing agencies, software consulting firms, or even a scaling nonprofit, putting your top performer on a fixed salary and then calling them manager or director is a really common growth milestone. It feels like a win, but under the Fair Labor Standards Act, that assumption that just giving somebody a fancy title and a salary means you don't have to worry about overtime or clocking in and out and tracking hours is flat out wrong. So in today's video, I want to strip away a lot of the myths that I hear when people come into the office for a consultation or when I'm working with clients and help people look at the exact legal tests for the most common overtime exemptions. And we'll use service-based businesses and a couple of case studies in this video to help show exactly how these exemptions work in the real world. So if you're ready to protect your business or nonprofit from what could potentially be truly catastrophic back pay and overtime, unpaid wages type of claims, let's jump right in. In order to legally deny an employee overtime under the Fair Labor Standards Act, their position must satisfy 3 different legal tests. The very first 2 tests are purely financial, the salary level test and the salary basis test. And this is where I see a lot of the misconceptions come from because people assume that that is the end all be all of whether or not somebody's entitled to overtime. So they go, hey, I'm paying them a salary, we're done. Right? And that's the end of the legal issue. And that's not how the law works. As of 2026, the standard minimum salary threshold is $684 per week. Yes, the law does it in per week. I know that's not how normal people think of their salaries. So that amounts to $35,568 per year. Now, if you've been paying attention the last couple of years, there was a lot of litigation and fighting and attempts to change that and bring that threshold up. The Department of Labor, at least at the time of this recording, has given up on that. So we're back at that $684 per week or almost $36,000 per year. If you pay an entry-level coordinator or designer or whatever the position might be, even $1 less than the baseline, that employee is legally entitled to overtime. Doesn't matter that you were paying them a salary. It doesn't matter that you weren't keeping track of their hours, except for we'll talk later about how that will come back to bite you. But they are entitled to overtime. It doesn't matter if they agree otherwise. They're still entitled to overtime. The real danger for service-based businesses, however, is not the salary level test. I think most people get that part. It's actually the salary basis test. The salary basis test dictates how you pay that salary. So an exempt employee must receive their full weekly salary for any week in which they perform any amount of work. Of course, there's an exception for the first week they start working if they start work on a Wednesday of their first day at this new job. Obviously, there's an exception for the end of their time with your business or nonprofit where if they quit on a Tuesday, you don't have to pay them for the full week. But the common mistake that I often see is taking other deductions that aren't permitted. So say, for example, you have a growing marketing agency, you hire an account manager, you put them on a fixed salary, they clear that threshold. And then one Tuesday, as often happens, they're dealing with a client call or meeting Tuesday morning. Something comes up on their personal lives that afternoon. They end up taking the rest of the afternoon off to deal with whatever that emergency was. Well, if you dock that manager's pay for not working Tuesday afternoon for, say, missing 4 hours because they ran out of accrued PTO, you can actually fail the salary basis test in that situation. And mistakes like this can destroy the exemption, not just for that one particular account manager, but actually across the board for everybody that's in that same position. So while I'm not going to get into all of the nitty-gritty details that cover, when you can make deductions and when you can't, the big thing I want you to know and take away from this video is that you need to sit down with either your HR professional or your attorney and make sure you fully understand all the nuances of those exemptions. And when in doubt, make sure you're asking the questions so that you don't improperly deduct someone's pay and then later on wonder why you're getting a demand letter from their employment attorney. Now, before we dive into the specific exemptions, which is what I really want to focus on in this video, we need to clarify this third test. So we talked about salary level, we talked about salary basis. The third test is the primary duties test, and that's really the backbone of the FLSA and its regulations. And that's the part that I find that many small business owners and nonprofit directors tend to skip right over, right? This is why you can't just assume that if I pay someone a salary, they're automatically exempt from overtime. That is oversimplifying the law and is just flat out wrong. An employee's primary duty, so we're looking at the principal, the most important work they perform day in and day out, must correspond to a specific exemption that you're claiming. So you're saying this employee is exempt from overtime because their primary duties meet one of these specific exemptions. And unfortunately, this is the classic example of, hey, is such and such a job title exempt? It depends, right? It's the answer that clients hate to hear. It's a fact-specific analysis or inquiry where we're looking at the position's overall character. So we're looking at things like the relative importance of their exempt duties, right? The part that actually meets the test compared to what else they're spending their time doing over the course of the day or week. We're looking at how much time they spend performing the actual exempt duties as opposed to, what you might think of as kind of the drudge work. We're looking at how much freedom they have from direct supervision. And we're looking at, kind of the overall relationship between the employee's salary versus the wages that are being paid to other employees for all the non-exempt stuff that everybody, especially on a small team, wearing all the hats, has to pick up and do. And of course, this gets even more complicated because you might have somebody whose, primary job duties or their overall, as we're looking at their role day to day and week to week, kind of fits a combination of a couple of different exemptions, which can be fine. But again, this is why this has to be a deeper level analysis and not just, I made an assumption. Why is this agency looking at my business or nonprofit? Why is this employee demanding overtime pay? So the bottom line, it's not about the employee's job title. It's not about what you put in a job description, especially that cute job description you wrote a year ago when you were recruiting and you hired this person and nobody's looked at ever since, okay? What really matters at the end of the day is what the employee actually does every day. Now, there are three primary exemptions that we tend to think of as the white collar exemptions. And the first one is the executive exemption. So in order to qualify, your employee's principal, most important responsibility must essentially be management, either of your business or the nonprofit organization itself, or a distinct department or unit within the business or the nonprofit. In addition, they have to regularly direct the work of at least two full-time W-2 employees or full-time equivalents. And as a part of that management and direction, they need to have real, actual authority over things like hiring, firing, or promotions, or at least, have their contribution to that discussion really be considered and valued and not just like, oh, no, 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 we don't want you making that decision. Me, the business owner, I'm going to retain all of that myself. That's what you can't have. So they really do need to be critically involved in the management of the organization itself, or a department within the organization, and that includes managing people. Now, this brings us to a common mistake made by service-based businesses. Say, for example, you have a boutique agency and they promote their top talent to creative director or account director, and they move them over to salary. But because the business is running lean, like a lot of small businesses do, that new director still spends the majority of their week doing the exact same production labor as the rest of the team. They're still writing copy, they're still designing marketing assets for the clients, they're still doing basic client execution. So if you have an auditor come in from the Department of Labor, or if this employee is disgruntled and they get that plaintiff's employment law attorney to kind of send that nasty demand letter for unpaid overtime, they're going to look at the actual day-to-day and week-to-week workflow, and they're going to very easily see that this position fails the duties test for the executive exemption. The primary work that this person is doing is production on a day-to-day basis. They're not managing the business, they're not managing a department, they're not managing people, they're not making hiring, firing, promotion decisions. So they are technically a non-exempt employee. They are still entitled to overtime. So if they put in a 50-hour work week to help your agency hit a deadline, you legally owe them 10 hours of overtime for that week, regardless of that impressive title, regardless of what the salary is. And if that employee gets to be disgruntled, they're looking for some reason to get back at you, they're upset for whatever reason, whether it's the pay or something else that happens in the business, you best believe they're going to come up with all kinds of weeks where they worked, 50 hours here, 60 hours there, and they've never been paid overtime. And you told them that you don't pay overtime and we just don't do that as a company. And they're going to use that and the lack of records against you. And we'll talk more about the record keeping a little bit later. Now let's take a look at the administrative exemption. This is perhaps the most widely misunderstood and abused category in employment law. I mean, maybe the independent contractor classification, and we talked about a lot of that last month. But the administrative exemption is not a catch-all bin for general office workers or desk jobs. In order to actually qualify, the employee's primary duty must be office or non-manual work. We get that part, but it also must be directly tied to the management or general business operations of you, the employer, or your primary customers. But the ultimate hurdle is that the position must explicitly include the regular exercise of discretion and independent judgment on matters of significance. So your secretaries, administrative assistants, you get fancy and you call them an executive assistant. These people that do exactly what you tell them, follow your core processes, they don't fit the administrative exemption, despite the fact that we automatically think of them as administrative workers. And that's nothing against secretaries and administrative assistants. They're incredibly important people in a lot of businesses. But that is not what this exemption is referring to. So let's take a look at our next case study. In this example, we have a software consultancy, and they hire a client success specialist or an operations coordinator, and that person handles vital work for the company. They route support tickets, they organize calendar schedules, and because as a part of growing the business, right, the entrepreneur, the owner here has heard, hey, in order for me to scale, I've really got to make sure I've got my operations in order. I need to get things written down. I need some standard operating procedures. I need to get everything out of my head so my employees know what to do and they can do it how I want it done. Our new success specialist or operations coordinator is following that manual. They are following those standard operating procedures, and they are doing a great job of keeping your clients happy. However, they do not have the authority to formulate company policy by themselves. They don't have the authority to negotiate terms with your major vendors. They don't have the authority to sign contracts and bind the business financially. They're executing procedures, yes, but they're not executing independent judgment on matters of significance. And because of that, under the law, they too are non-exempt. If they work late on a Thursday night troubleshooting a customer's account issue and they go over 40 hours that week, they are legally entitled to overtime pay. Again, regardless of salary, regardless of title, but based on what it is they're actually doing day to day. Let's break down the two types of professional exemptions, and this is our last major bucket under the so-called white-collar exemptions. The law splits the professional exemptions into two distinct categories. On the one hand, you have your learned professionals, and then on the other, we have creative professionals. Two very different types of workers, but the law has lumped them together under this professional exemption. For a learned professional, the primary duty must require advanced knowledge in a field of science or learning that is customarily acquired through a prolonged course of specialized intellectual instruction, right? So what does that mean? We're talking about your lawyers, your doctors, your engineers, architects, CPAs. They had to get an advanced degree of some sort, typically, very specialized course of instruction. as a baseline prerequisite to even get the job as a lawyer, a doctor, an architect, or an accountant. It's not, hey, they're generally intelligent. It's not, hey, they got a bachelor's degree. It's not, we can train them up on the job, right? It's that advanced degree, that advanced education that really makes them a learned professional. On the flip side, we have our creative professionals. And here, the primary duty must encompass the performance of work requiring invention, imagination, originality, or talent in a recognized field of artistic or creative endeavor. So, this could be something like your senior copywriters, your lead brand strategists, and of course, what we think of as creative professionals, your fine artists, your musicians, singers, things like that. So, let's take another case study example. Here we have a software development agency and they hire a junior engineer. Now, this junior engineer is self taught through one of the coding boot camps. They've graduated, they've gotten their certificate. The agency puts them on a salary, and the owner of the agency thinks, hey, all software engineers are exempt professionals. Sounds like a learned professional to me. Go forth and conquer. But again, let's take a look at the daily reality. This junior engineer doesn't hold an advanced specialized engineering degree, so they really don't meet the learned professional test. And their day to day tasks certainly don't fit the creative professionals test either. They're, patching up standard code under close supervision, they're writing routine scripts, they're running basic debugging sequences, the kinds of things that, we debate and argue about whether or not AI is going to take that job. That's who your junior software engineer is. So we're not talking original artistic invention or expression. We're not talking high level strategic initiative. We're not talking advanced degrees, right? So they're not learned professionals. They're not creative professionals. They are technically non-exempt. So if they stay up till 2 a.m. one night running a server migration and that pushes them over 40 hours, like the other case studies we've looked at, they too are owed overtime, and your business is going to be exposed if you're not tracking those hours. So, if you realize that your agency, your tech consultancy, maybe your nonprofit is operating in a kind of weird gray area where we've gotten away with it for a while, but as I'm listening and watching this video, we're not quite nailing the exemptions in the way that I thought we were, but you do need to act. So let's take a look at some concrete steps that you can take today in order to start protecting your business or nonprofit. So first thing I want you to do is go check your employee handbook and make sure it has an FLSA salary basis safe harbor clause. You see, federal law does provide a bit of a defense when there are some administrative mistakes in how payroll is run if you do certain things. So first of all, you have to have a written policy that explicitly prohibits improper pay deductions. It needs to include clear internal complaint procedures for your staff so that if they see something on their pay stub, they know how to bring it up and how to get it corrected. And your policy needs to promise to promptly fix any payroll mistakes. That's how you actually insulate your organization from losing the exemption over accidental calculation errors. Second, I want you to take a look at your hourly or the non-exempt part of your team. And remember that precise records are really your only legal defense. That is your only saving grace. If you are not tracking hours accurately for your non-exempt employees, then the courts will rely on things like your employee's testimony, their memory and recollection of how many hours they worked on a typical week, on the weeks that they went over because they were working on big client projects. And they'll rely on these estimations to calculate the damages. It is your duty as the employer. You always have the burden of proof to have those timekeeping records and be able to show, no, we paid our workers every hour that they were owed and they weren't entitled to overtime because of, they didn't hit 40 hours a week. So you have to have those records. Because of this, you really should not let anyone manually modify an employee's time card behind the scenes. Instead, you need to set up your policies to actually require a little bit more of a workflow. So instead of, John or Susie coming in and saying, "Hey, I forgot to clock in. Can you put a couple hours back on my time card?" You should have the employee actually submit and sign a formal timesheet correction form. That way, every time there is some sort of an adjustment, it's backed up by an explicit, documented directive from the employee and not just somebody going in and make changes on a verbal say so. Because then later, again, we have that disgruntled employee. They come back and say, "Oh, no, my supervisor, they lied and made that up. They weren't supposed to change that. They were just changing it so it wouldn't look like I would get my overtime pay." That's what we don't want. So you always want to CYA and have a paper trail. Building a compliant HR practice is never about picking a shortcut that lowers your administrative workload. Like, the law is not here to try to save us time as small business owners and nonprofit directors. The law is about aligning how you run your organization with what the law actually requires through these legal tests. And my goal is to make sure that you are doing that before risk finds you, before it hits your organization's bottom line, or in some cases, before it becomes a personal liability for you as the business owner. My clients range from early stage startups to growing service businesses and nonprofits with nearly 100 employees across a wide variety of industries. If your organization is approaching a major hiring threshold or preparing to promote an internal leader, let's review your actual HR operations. Visit msnlawoffice.com today to schedule a consultation. And now that you know how to audit your standard white-collar exemptions and what questions to actually go ask your attorney or HR professional, your next step is mastering how the law treats your entry-level talent. Check out this video on employment laws, paid versus unpaid internships, where I break down the exact legal criteria you must meet before you onboard your next temporary hire. I'll see you in the next video.